As for the Singapore property market, things have changed with the latest announcement by the Singapore government on the 14th of January 2011. So the latest measure is the fourth round of property cooling measures announced by Singapore government. And of all the four rounds of measures announced, this round is the most serious. Why is it so? Because this round, what happened is they announced a seller stamp duty of 16% for if someone buy and sell a property within 1 year, and a 12% if they sell within 2 years. So effectively, this will actually almost remove any possibility of making money from short-term trading of properties. So if anyone wants to buy a property and sell within 1 year, the break-even is needed to achieve that is more than 22% rise in the property prices. Because the 16% is a seller stamp duty, there's still a 2.5% for the buyer stamp duty. And of course, if you want to sell a property, there's still property agent commission about 1 to 2%. And last but not least, you need to pay interest on housing loan about 1 to 2%. So the break-even point is almost like 22%. It's almost quite difficult for any property price to move up more than 22% within 1 year. So this latest round of measure actually basically remove all the speculative activities in the Singapore market. It may also deter some genuine investment, because a lot of people, when they invest into properties, they hope to borrow some money. And right now the latest measure says that maximum financing is only 60% of the purchase price. It means that if someone wants to buy a $1 million property, now they need to come up with 400,000 of their own money. And a lot of people, especially the middle class, may have difficulty coming up with 40%. So some of these people may be deterred. And for some of them, to come up another 10%, or for 1 million property is 100,000. To have another additional 100,000, for some people, this may take them another few years to save for the 100,000. So for some of these middle class prospective investors, their investment decision may be delayed for a few years. So in actual fact, this round of measures can be the tipping point for Singapore property market. What is likely to happen is that in the next few months, transactions are likely to go down. And of course, depending on the global economic environment, if at the end of the 2011 or 2012, if there's another round of a global financial crisis, then there might even be a possibility of a fall in property prices then. But if not, if the global environment is stable, then what we can see is a reduction in the transaction and possibly prices stable or moving slightly lower. So actually this round, I think the government measures is the most serious, and this can be a tipping point for the property market. So I would say that anyone thinking of investing into properties, you better do your sums correctly and think twice before making that decision.